Could you give some tips for people who are looking for those VCPs and they're going through the charts? You obviously have developed your eye, so you can quickly, probably within seconds, go through a bunch of stocks and see it. But what are some tips for people to find VCPs if they're newer to this?
The tips are to, you have a lot of examples in my books. So
Mhm.
you go to the books and you take a look at those examples and then look for stocks that look like that. And then build your own model books. Look for stocks, find the stocks that have those patterns, and then, the ones that worked out, the ones that didn't work out, you make copies of those. You maybe put them in two separate piles and you start analyzing them and taking a look at what works and what doesn't work.
Perfect.
But you start off with some good precedents of winners that came from low risk entry points for maybe O'Neill's book, I believe, uses weekly charts, so that might be for a little bit longer term investors. But to get really specific and pinpoint, my book has a lot of charts there from the daily perspective. And then, of course, if you've gone to my workshop, you have a workbook, and that's where there's 400 or 500 pages there and hundreds of examples. So you've got those precedents, and that's the starting point. That's where I started. I started with looking at the best winning names and then seeing backing into current names that that look like those names. I know you asked about fundamentals before. Fundamentals I'm always looking for the fundamentals,
Mhm.
but I'll never invest in a stock just because of fundamentals. It
Right.
has to have the technicals.
Right.
So it has great earnings, great sales, great margins, great story. Fundamentals are great management, return on equity, but the stock's in a downtrend. I'm not buying it. So, but on the other hand, stocks in an uptrend has no fundamentals, or when I say fundamentals, reported fundamentals.
Right.
Maybe they're showing losses, right? No sales, losses,
Mhm.
but it's a biotech company. Well, 75, 80% of biotechs don't have earnings. So that's not a situation that you would ignore. Now you're going to be trading off the chart. You're looking for very high relative strength, high alpha names. You're looking at the FDA approval process, things like that. So you have to know the category that the company's in, and then you know what fundamental driver to look for. And again, in my first book, there's no fundamentals in my second book. My first book has a pretty big section on fundamentals.
Perfect. And in terms of fundamentals a little bit, do you also look for group moves? So if a stock is setting up with the VCP, does it add to your conviction that multiple other stocks within that sector or industry group are also showing signs of accumulation and are in stage two uptrends?
Yes and no. So, and I'll tell you why. So, first of all, you're in a bear market and you start turning up off the lows.
Right.
And you're looking for group action, right? You're trying to get some confirmation. Well, sometimes you'll get the very cream of the crop will set up and take off.
Mhm.
And that's why they're called leaders. They'll lead. And by the time you get to the group and you see that the group's doing well, the best stocks are long gone. And this is what happened to me in the 80s and somewhat in the early 90s. When I first started getting this down, I was looking at the market saying, okay, wait till you get the follow through day, look for good action in the market, then look for the groups, and then look for the best stocks in the group. I was always missing the leaders. I very seldom had leaders. I was buying laggards all the time. The leaders were extended. Either I was buying extended leaders or I was buying laggards. So I said, why do I keep missing these stocks? How come I don't see them? So then I flipped it completely around and I said, I'm going to go stocks, group, market, and
Mhm.
let stocks lead me to the groups. And when stocks are acting well and we're seeing groups working, we know it's a healthy market. And that's when I started grabbing all the leaders and had that big run that you talked about, that 5-year run was based on completely flipping the script.
And during that correction, are you running any specific screens or are you just looking at every stock that passes through your trend template?
Well, the trend template is just a qualifier.
Yeah.
That's just the first criteria. So that's not all the criteria, but that's what I call a qualifier, non-negotiable criteria. It has
Right.
to meet that criteria. So I'm looking for stocks. Now it depends. Again, if let's say we're starting a new, we have a bear market, starting a new bull market. Well, then I'm going to look for the highest relative strength names, stocks near new highs, stocks that have held up the most, stocks that have rebounded the fastest, those type of names. Now, let's say we're in late stage in a market and we've been in a bull market for a couple of years and we have a 6-week correction. Well, in that case, I might run a 6-week relative strength and see what held up the best during that 6 weeks. That's what I call a utility screen. So you
Mhm.
have certain, you got to think of it sort of like you're a builder or a carpenter, right? You've got a screwdriver, a hammer, drill. You got different tools. You got to know when to apply those. You're still building a house. You're still a carpenter, but you have different tools and tactics for different parts of the job.